Waiting for markets to bounce back a little after yesterday's big rout. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak. Katie Greifeld is off today. Bloomberg Open Interest starts right now.
Coming up, a crucial moment for the Kamala Harris campaign. CNN reports that she has tapped Minnesota Governor Tim Walz as her running mate. And a tepid turnaround. Global stocks stabilize for now as some investors brace for more volatility after Monday's massive sell-off. Meanwhile, earnings abound, from Caterpillar's sales miss to Lucid's $1.5 billion lifeline. We'll take stock of the latest corporate results. Let's take a look now at where markets are trading. As you can see, we do have a little bit of a bounce back, but it is fairly tepid, especially compared to what we saw overnight in Japan, with the Nikkei up 10% after the big drop going into Monday's trade. In terms of the 10-year yield right now, it is rising, so investors are selling those treasuries that they were clamoring to buy yesterday morning. Sonali?
I want to take a look at some of these stocks this morning, Matt, because, of course, we have a lot of earnings, and Caterpillar says annual profits will be higher than expected. And in the rideshare industry, of course, we also flip up the board. We see Lucid and Uber roaring after reporting earnings. These are some of the biggest moves. So Lucid up more than 9%, Uber up more than 8.8%. Remember, pre-market, they have also said that they're not seeing signs of weakness in the consumer here. And Palantir just roaring, up 11% pre-market. Matt, remember, they're also saying that they're boosting their forecast. We also today, in the next hour, have an interview with the Lucid CEO, Peter Rawlinson, at 10:30 a.m. Eastern. You're not going to want to miss that.
Yeah, absolutely looking forward to asking him what he plans to do with this additional $1.5 billion injection that Lucid is getting from Saudi Arabia. Now, let's get back to the markets here. Investors breathing a sigh of relief to some extent this morning, but some market veterans warn that turnaround Tuesdays don't always last. Many traders are braced for another big sell-off, with black swan hedging to ensure their portfolios surging. And J.P. Morgan warns that the carry trade unwind has more room to run. Meanwhile, Citi strategists recommend waiting before buying the dip, while Goldman Sachs says that buying the S&P 500 after a decline of 5% has typically been profitable in the past 4 decades. Joining us now to share her perspective is Gargi Chaudhuri, BlackRock's chief investment and portfolio strategist for the Americas. Gargi, great to have you on the program. Thanks so much for joining us on set. So yesterday was nuts, right? But it seemed to calm down a little bit, even amid the big losses at the end of the session. Today we saw a huge turnaround in Japan overnight, but we're not really getting that in futures. Do you think investors should be buying the dip?
So good morning. Thank you for having me. I think yesterday was what one would expect in a thinly traded August Monday, when you have some slightly weaker than expected data, as well as massive moves overnight in Japan, as well as unwind of the yen carry trade that you talked about. All of that influencing sentiment. But what I think this points to is how much investors should focus on the fundamentals. Between July 1st, call it, to yesterday, have fundamentals meaningfully shifted? One can say that perhaps at the margin, the job numbers are a little bit concerning. They're slowing down, they're moderating. But are we really thinking about a recession? And my answer would be no. So where you buy equities and where you buy bonds is going to be very crucial. On the way down, investors sell indiscriminately because you just want to get out of your positions. On the way up, you buy with surgical precision. And that is where we're telling investors, focus on quality, focus on companies with strong balance sheets, focus on companies with profitability, and in the bond market, focus on the belly of the curve.
There are a lot of investors out there still very nervous about buying into this dip. And if you take a look at what JP Morgan was saying, this idea that the carry trade is only half complete, how much more deleveraging has to happen before this market feels safer for an entry point?
I think a couple of things have to happen. Obviously, the impact of the carry trade and how it can be felt in different corners of the market will be important. But alongside that, I think we also have to wrap our heads around what the data is telling us. Obviously, we saw the market turn around yesterday after the ISM services data. I think we're going to keep a sharp eye on what the Fed speakers are saying. We heard from Mary Daly, who again pushed back on the narrative of recession. I think all of that is super important. So yes, the yen carry trade will be technical, but the fundamentals, I think, is what's going to matter. And what we're looking for, of course, is the next payroll print, but also the couple of CPI data. We're looking at the initial jobless claims, as that's obviously something that's a lot more timely than many other data points.
Right.
And we're looking at all of that to determine, is this just an expected moderation from the COVID-fueled levels, or is there something more? As of now, I don't think there's any kind of concern around recessionary fears, which is why, as we don't have a recession, we're about to have the first rate cut in September. Those are some great levels to be buying profitable, high-quality companies.
All right, Gargi, hang tight, because we got to talk about this breaking news in politics right now. Kamala Harris has reportedly tapped Minnesota Governor Tim Walz as her running mate. This, according to CNN. Bloomberg's Annmarie Hordern joins us now at the desk. And Annmarie, this is interesting because she had a choice between, a hawk on Israel and a fairly conservative Democrat in Josh Shapiro in Philadelphia, and a very left-leaning liberal governor out of Minnesota, and she went left.
She went left, and many would say, actually, she is left, although we have seen her renege on some policy proposals she talked about when she was running in 2019 to get the primary, to be on the Democratic primary. Things like fracking, they've come out now and said actually she doesn't want to ban fracking. So she went with Governor Walz of Minnesota, according to CNN, at the moment. He's in Minnesota. This leans Democratic. This is a blue state, but it's very close to Wisconsin. It's very close to Michigan. I guess the hope here is that he can still be that voice for the Rust Belt. And he can be that folksy, rural, charming guy on the ticket who, frankly, just talks to the American people. When you see him in interviews, if you see him interact with people in Minnesota, he talks in a normal manner. He is able to speak to white men. He is able to speak to individuals who potentially are not college educated. So I think that's where they're going with him in terms of trying to balance out the ticket. We do know that they wanted to get a white male on the ticket, so he's going to be that one. He's in Minnesota. She's from California. I think with Shapiro, it would have been another coast.
That's very much Soundgarden. It's very much feeling Minnesota.
Yeah, no, but Shapiro would have been another individual. Right. It would have been East Coast and West Coast. I think one thing for sure, though, under the surface, what progressives were really pushing against Shapiro because of his stance on Israel, how he dealt with pro-Palestinian protesters, and it looks like she went with the other individual potentially because of this.
What's the role of some of these other constituents here? What's the role of Congress here? I'm looking at this Axios headline calling it quiet diplomacy in Congress when it comes to Tim Walz. There's also the unions. How might some of those cross currents play into their full ticket?
Well, I think when they're looking at this ticket, they wanted someone who could be that person. Probably she was the one that made the final decision on this, who she thinks makes up for what she lacks. Now, we'll see what that means tonight when they're at the rally, when they're talking to individuals in the Midwest. And I think for the Kamala ticket right now, they probably agree, though, on a lot when it comes to policy. You mentioned the fact that he is a progressive. Things like tuition-free meals at state universities he was for, enshrining abortion rights in Minnesota, providing protections for gender-affirming health care. He is pretty to the left. So they're both going to have to move to the center if they want to win those independents.
He does want to provide protection for school-age children to get things like puberty blockers, and this is what you mean by gender-affirming.
Yes, providing those protections.
Interesting. So, but they're both to the left. It's interesting to me that she didn't choose somebody in, a little bit more the vein of Mark Kelly, who is the son of police officers, who was an astronaut and a fighter pilot, and much more moderate in terms of, his stance on the border, for example. This ticket is really not going toward the center as I thought it would. Does that surprise you?
Not really, because we've seen how much of the outpouring of support Governor Walz has had from progressives. Also, how well he's done in terms of communication. He has really been the one that termed this whole idea that Republicans are weird. His words, not mine. He said Trump, Vance are, quote, they're just weird. Kamala Harris, Gen Z, TikTok, this has picked up. So he's already been an effective communicator for her. He's an effective individual when it comes to bringing in donations. Also, similar in the vein of Kelly, who's an astronaut, a vet, he actually was a National Guard officer, he was a congressman, and he was a teacher. So he has a really long list of other professions and other hats he used to wear. And I think that's why they think he could be an effective communicator in middle of America.
I really want to get this in here, too, because so much of the reason people thought she was going to choose Shapiro was to win Pennsylvania. Now that she's not, and according to the AP now as well, also saying Tim Walz has been picked, does this mean that Pennsylvania becomes more or less difficult to win?
You know, that remains to be seen. People will say, does it actually matter who the VP is? It matters who's on top.
People always say no.
Yes, and it matters who's on top of the ticket. But when you're dealing with very small groups of people, and if this election is going to be won or lost in Pennsylvania, which many are claiming it is, then potentially Shapiro could have helped because he has great numbers in Pennsylvania and he's very well liked there. What might be a little bit awkward this evening is that Governor Walz will be flying over to Pennsylvania for the start of her campaign. She's going to announce him side by side at this rally and is going to be in Shapiro's backyard.
Well, you know, there's the rest of a cabinet, too, right? Annmarie, we thank you so very much. That is Bloomberg's Annmarie Hordern. Now let's get a look at the stocks moving ahead of the opening bell. Tons of earnings out there. Abigail Doolittle is here to join us.
Tons of earnings indeed, Sonali. And after yesterday's sell-off, we have lots of stocks in the green, including Palantir. The data company put up a great quarter. They beat adjusted earnings. Revenue grew by 27%. They also beat the revenue estimate. This as they boosted on strong AI demand. The company also really emphasizing the importance to them of the U.S. military. Let's take a look at some other earnings movers here because the shares of Uber should be trading higher. Yes, indeed, up nearly 9%. They put up a nice beat and boost as well. 20% adjusted profit beat. Sales were better by 1%. The third quarter bookings demand is strong and the rideshare demand is strong. Yum Brands, on the other hand, down just slightly, down 0.3%. It was a mixed quarter. They beat profits slightly. They missed sales just a little bit. Taco Bell was strong, but Pizza Hut and KFC, not so much. And then finally, let's check in on the biggest movers, big tech. We have mainly a rebound. NVIDIA up 2.5%, Tesla and Amazon higher, but you can see Amazon up just ever so slightly. And then, Matt, take a look at the one stock that is not like the others. That, of course, is Apple, right now down 1.3% as the biggest weighting to the S&P 500 and the NASDAQ. Keep an eye on this one. It's very tenuous technically. If this decline continues, it, from a sentiment standpoint, could pull down the rest of the complex. We'll be watching this closely.
All right, Abigail, thanks very much. Abigail Doolittle talking about some of the stocks moving ahead of the open. Still got about 18 minutes to go. Coming up, Caterpillar shares are up as the world's largest maker of earth-moving equipment says it'll earn more money than expected this year. We'll dig into those results next. This is Bloomberg. Let's get to high interest now. Look at what's making headlines around the world. Vice President Kamala Harris has tapped Minnesota Governor Tim Walz as her running mate. This is according to CNN and AP. In choosing Walz, she's turning to a Midwestern governor, military veteran, and union supporter who helped enact an ambitious Democratic agenda for his state, an ambitious progressive Democratic agenda for his state, including sweeping protections for abortion rights and generous aid to families, really going to the left with this choice. Jared Kushner wants to turn Balkan war relics into luxury hotels for the wealthy. Albania and Serbia are championing the investments, but critics fear it's to curry favor with the Trump family. And San Francisco Fed President Mary Daly says the labor market is showing signs of softening and officials should begin cutting interest rates in coming quarters. How much the Fed will have to cut and when, she said, will, quote, depend a lot on the information incoming, on the data, of course, as the Fed always says. Sonali?
And I want to check in on shares of Caterpillar here. They have been volatile pre-market in the sense that they were up. Now they are certainly down. They're down more than 1.2%. And the stock, remember, is seen as a bellwether for industrial activity. Sales were below expectations in the second quarter. Profit beat. We're going to discuss more with Bloomberg intelligence analyst Chris Ciolino. And you think about just what they said. Initially, that idea that profitability was getting a little better was a bright spot. But of course, given what a bellwether they are, not every segment had improved here. Where are you the most concerned?
Yeah, I actually think there's a lot of positives to take away from the report. Underlying margins were better than expected across all units, with particular strength in the energy and transportation unit. Yes, they took down the sales guide, but I actually think that's a positive here. The reduction is really driven by a decrease in dealer inventories that they expect over the balance of the year. There's a big concern out there that Caterpillar is building too much inventory. So I think this slight tweak down on the top line is actually a positive, but they also raised their margin outlook for the year and now expect earnings to be stronger than they anticipated heading into the quarter.
All right. Chris, thanks so much for joining us on Caterpillar. Bloomberg intelligence analyst Chris Ciolino. You can look at his research on the Bloomberg terminals. Type BIGO. We're back now with Gargi Chaudhuri, Chief Investment and Portfolio Strategist for the Americas at BlackRock. And Gargi, what do you think about earnings season so far? I mean, it's striking to me that if you took out the Magnificent Seven, the last 6 quarters have seen contractions in earnings, really an earnings recession. Now we're expecting that to broaden out and turn around. Is that coming to fruition?
It is a little bit, and I think that's what's very encouraging about this market. The fact that we are, especially this earnings season, seeing earnings growth come from the other sectors. We're seeing that in healthcare, we're seeing that a little bit in financials. And I think all of that is a really good sign for the broader markets, that it's not just coming from the same 5 or 7 stocks. I'll also say that under the surface, we are seeing a little bit of concern around consumers. Obviously, that's coming up a lot, and I think that'll be something that we discuss a lot more around the health of the consumer. And we're seeing that in some of the earnings transcripts around especially the bottom quintile or the bottom percentile of the income spectrum is beginning to show a little bit of weakness. Again, where that can go will determine how, how some of these companies do, but which is why I think focusing on profitability and focusing on companies with strong balance sheets and strong profit margins is going to remain really important.
I need to also give you a bit of a, let's call it a victory lap here, for a very smart call you made about 2 weeks ago. At the beginning of July, you saw this tremendous rally in small and mid-cap stocks, and you look now, that entire rally has been wiped out. You were skeptical about this from the beginning. What is the big cautionary tale here?
Yeah, so the reason that small caps did as well as they did was right after that July CPI print. Markets were pricing in cuts, and that was what was one of the biggest catalysts. And we felt that, of course, you needed to see those real rates move lower, but at the same time, you also needed to expect earnings growth to come forward. You needed to see that, which we weren't seeing. More importantly, I think we needed to recognize that small caps will only work in a period where interest rates are going down, but growth is remaining steady or moving higher. As we have since learned, again, no recession, but growth certainly isn't moving higher. So what has been more interesting to me is the move away from cyclicals to defensives, that especially as we go into the next couple of months into election season, I think there will be more investors that are gravitating towards some defense. Buffered strategies are a great way to play that. You can remain in the markets and protect your downside. Minimum volatility strategies is another way, and then utilities is a great way for investors that are looking for a little bit of defensiveness.
What if we get, we're going to talk to Tony Dwyer a little bit later, and he wants to see the Fed cut deeply. To counter, the massive hikes that we had when they were trying to thwart inflation, 75 basis points, 4 times in a row. Huge, right?
Yeah.
So, but if we get 50 basis point cuts, if we get, Connor Sen yesterday was writing, he wants to see 100 basis points in this year, sort of front loaded. Do you then go back into the Russell 2000?
I think it'll depend on why the Fed is cutting. So if they're cutting because of a growth shock, what we were pricing in yesterday as we walked into work, I don't think that's going to be a good time for Russell 2000.
But if, the Atlanta Fed says 2.5% growth in Q3.
If indeed we see strong growth, so 2.5%, exactly what we saw in the second quarter following into third and fourth quarter, if we see that strong growth as well as the Fed cutting, as well as, importantly, the Fed cuts moving its way through the economy such that small cap companies are able to allow themselves to have access to banking and access to the credit markets. I think all of that, the transmission mechanism matters. If we see that, then absolutely. For now, IWM, which is, of course, our Russell 2000 ETF, has seen a lot of activity, as you know, Matt, in the option space, call options, renters of the space, which we think is fabulous to play for short-term moves in the market, but we haven't really at this juncture, we still think quality, and if you're looking for a little bit of protection, then buffered is the way to go.
You know, what have clients been asking you over the last 24 hours? How much of an inclination is there to hide in cash right now?
Yeah, that's a great question. So we've obviously been speaking to a lot of clients over the last 24 hours, and the first question that comes up is, you know, what signals are you looking for to make sure that this isn't a recession, right? So that's top of mind for investors. And number two, they're asking around, like, should I move to cash? And if not, why not? Because cash is yielding us, you know, over 5%. And there the conversation has to be around explaining to investors that, number one, if you move to cash at this juncture, and depending on how long you can hold it, you might
lock in your losses.
You might not get that entire 5% that you see on your screen. And number two, bonds have finally brought back that negative correlation. The normalization of correlations between equities and bonds are back. So bonds are giving you and can give you more of that protection. And finally, I would say that dips are very common in markets.
The buffered, you mentioned the buffered product, and I have to ask, how popular was that before this? I'm sure investors that got into those are happy that they had them.
Yeah.
And have you seen that popularity increase over the last 48 hours?
If we just look even over the last 24 hours in terms of how our MaxJ buffered ETF, which is the max buffer ETF, has traded, a lot of volume, 2 times average daily volume, that is just an indication of investors sort of looking, as well as a lot of clients asking questions and flows into that space. I think given this rise in vol, there's still a 10% upside capture with minimum downside capture. You don't get that in these markets. So a lot of questions. We hope that many more investors will take this opportunity to not move to cash, but try to preserve their downside.
I don't think everyone knows enough about these products, which is why I think they're so interesting. Obviously,
well, that's why you should watch Open Interest.
I'm kind of an ETF, lover myself.
Gargi,
yeah.
we have to leave you there. We could go forever. That is Gargi Chaudhuri of BlackRock. Stick with us. We're going to talk a lot more about these markets ahead. Of course, we're getting a little bit of a bid back in the market this morning, but not by much. It certainly doesn't bring you back to where we were just last week. Stick with us. This is Bloomberg.
All right, we have 4 minutes to go until the opening bell. This is Bloomberg Open Interest. Quick check on what's going on in futures. You can see that we're looking at gains, a little bit of a bounce back after the big drops that we had yesterday. We are going to talk more on this program about the VP pick. Kamala Harris has chosen Tim Walz, the governor of Minnesota, to be her vice president as the campaign shifts to the left to counter Donald Trump. They are ahead now in the polls in terms of Real Clear Politics polls and in terms of the betting markets as well, and predicted. We'll talk about that later in the program. This is Bloomberg. Moments away from the start of trading on what could be a turnaround Tuesday. This is Bloomberg Open Interest. I'm Matt Miller. Taking a look at what's going on in futures, we do see slight gains. Nothing like what you saw in Japan overnight. I was shocked when I saw the Nikkei soaring 10% at the open in Japan, but we don't see that here in the U.S. We did have green arrows in terms of stocks, and you did have yields on the 10-year coming up as investors sell those bonds that they were clamoring for, at least at the beginning of the trade yesterday. There you hear the opening bell on the New York Stock Exchange and on the NASDAQ. Let's take a look as trades start to come in at the major averages and where they are panning out. You see the S&P 500 right now at 5203, so up 1/3 of 1%, adding about 20 points. The NASDAQ 100 adding about 80 points, also up about 1/3, a little more, almost 0.5% right now. And the Russell 2000, the small caps, coming up the least, but nonetheless making some gains, a little bit more than 1/10 of 1%. So we do see a little bit of a bounce back, but it's nothing like the kind of bounce back that we saw in the Asian trade. And the question is, how long will this hold? Because the concerns still abound. Lucid, for example, right now soaring 13%. That's not because the earnings report was so great, because they've gotten through all their production woes, because they've convinced Americans to buy electric vehicles for very high costs again. That's because the Saudis have injected enough another $1.5 billion, giving them a lifeline to get through to SUV production. You can see Uber shares also up more than 6%, and actually earnings have been fairly good right now. Palantir, if you looked at, was very positive. Caterpillar earnings in terms of the profits were great, but the sales not so much, and those shares have turned around. Sonali has a look at that right now. Sonali?
Yeah, if you take a look at it, to your point here, the profit did beat estimates, but remember, annual profit was higher than previously expected, but sales are going to be lower than expected. We had shares earlier today in the green, now flipping sentiment here closer down to 1%. Flip up the board, watching Palantir and Lumen. Persistent AI demand leading to both stocks rising today and rising by quite the margin. Lumen up more than 43% and Palantir up almost 12% this morning. Let's take a closer look at this bounce back in technology with Bloomberg's Abigail Doolittle.
Yeah, there is a bit of a bounce back, Sonali. Yesterday, of course, at the lows, that NASDAQ 100 down more than 6%, closing down about 3%. Let's take a look at some of the movers. So NVIDIA at the lows yesterday down 15%. That would have been the worst day since 2020, closing down 6%. A bad day. This stock in a bear market, trying to make a rebound today, back above 100. Technically, though, the stock does look vulnerable. Microsoft higher, Meta higher. But take a look at Apple. We were highlighting this one as a key stock to watch yesterday. It does very much look like it's going to drop below 200, go deeply back down into a range, down 1.9%. Now, an interesting tell on the tech volatility. So what I'm saying here is Apple suggests more volatility to the downside overall could be ahead for tech. The VIX for the NASDAQ 100 may too suggest that. You can see this massive spike up yesterday at the highs at a 39, much lower than the VIX itself, but the VIXN has been elevated above 20. Some options investors there really seeing what could be ahead for big tech. In fact, let's take a look at the NASDAQ 100 chart. We love to look at individual stocks, but at index level, the NASDAQ 100 yesterday going below that 200-day moving average. The RSI not quite oversold. If we compare this to 2022, you can see there was an area for several weeks, even months, before investors could really figure out what was going on. I suspect, Matt, that is ahead. Stay tuned for some more volatility in big tech.
Yeah, absolutely. Abigail, thanks very much. Abigail Doolittle looking at the charts for us. Let's talk more about the markets and the Fed with Tony Dwyer, market strategist at Canaccord Genuity. Tony, great to have you on the program. Thanks so much for joining us. Reading in your notes, I was reminded at the intensity with which the Fed raised rates. If you take a look at the five-year chart of the Fed funds rate, you can see they started with a little 25 basis point, but then went 50, 75, 75, 75, 75, and then 50 again. So huge leaps there. Do you think we're going to see the same kind of intensity on the way down?
It's funny, Matt, we look at what the Fed funds future, thank you for having me, the Fed funds futures are telling us. And it's so silly because if you look back in the beginning of the rate hike cycle, when they started raising rates in 2022, they had only assumed that the market had assumed that the peak rate would be 75 basis points. They ended up doing 4 75 basis point hikes in a row. And somehow we think that a 25 basis point cut, yes, of course it's messaging, but with the 10-year bond yield already down, given the obvious inversion, clearly the market has already discounted a pretty significant rate cut cycle, yet we're still talking about whether it's going to be 25 or 50 when it probably needs to be a lot more.
Well, to that end as well, if you don't see a lot more, Tony, what does that mean to the read-through of the market? Because you saw that sell-off really start to accelerate Friday after those jobless claims, and you have to imagine if rates don't come down fast enough, how that looks a year from now. Where are you seeing the pain?
It keeps us in this zombie-like environment. We haven't seen this broad market surge because we're still in the debate of whether it's a soft landing or it's going to be a recession. We still have the inversion of the yield curve. So all those factors that have kept us there without a more aggressive rate cut cycle keeps us in this I don't know what to do camp. And when that's the case, you have those top 7 stocks or top 10 stocks in the S&P become more than a third of the index, which is historically high because it's trapped investors in not really confusion, but just so much uncertainty that you got to go with the growth. That's why the Russell 2000 typically and the smaller cap and broader market have responded to rate cuts. But ultimately, we've got to get out of this zombie economy where is it alive? Is it dead? You don't know. And it really, I think that is ahead of us. And it's what the unemployment rate is beginning to message.
Are you worried that unemployment is going to get higher to 5% in a swift manner? I mean, 4.3 is not too bad, especially if it's because of a growing labor market more than layoffs. But if the latter starts to come, it'll be difficult for the market to handle.
Well, Matt, as you know, I mean, we've been talking for a long time. And as we know, the unemployment rate, Goolsbee said it yesterday, the unemployment rate goes up on a rocket ship and down. I say it goes up on an elevator, down on an escalator. You know, the rates have to come down pretty hard because the unemployment rate doesn't go up slowly. That's what I meant. The unemployment rate goes up on an elevator and down on an escalator. Companies don't want to hire people unless they have to, unless they believe that you're losing out on potential revenue. But when the costs get up there and the revenue falls, you can't cut costs fast enough for the revenue shortfall. That's why if you look at company profit margins, and this all ties back to the employment picture, profit margins really collapse during a recession because you can't cut employee costs quickly enough. So when it happens quick. And the signs are there in the last few, not just the last one, but the last few employment reports that were trending toward that rocket ship in the unemployment rate. And ultimately, Matt, I think that's what you got to have to clear out this economic zombie-like environment that I identified.
You know, that saying about going up on an elevator and down on an escalator, I heard the same thing for equities yesterday as well. I'm curious how you handicap where the floor is to this market and how much more downside risk there really is.
I think the craziest thing, Denali, is people like me come on TV and say and make a wild guess at that. This thing is obviously yesterday, you're driven by algorithms, you're driven by quants. The day-to-day stuff, I don't think isn't necessarily related just to the macro. It's where the stop levels are. It's where those. So you get these extreme moves. I mean, just look at Japan. Down 12% and then up 10%.
Nuts.
That's telling you that there's something else at play on a day-to-day movement. So what I like to do is step back and say, okay, what direction is the employment picture going? It's worsening. What direction is consumption going? It's worsening. And those are the drivers really of the forward-looking economy. So then the question becomes, is it going to be a 2008 environment or is it going to be like an S&L crisis in 1990? Remember, a recession happens when companies need access to capital and there's no capital to provide from either the bank or private sources. I think it's the opposite today. The banks are in very good shape from a capital level. The private equity and private credit side are getting new money in every day. They're just unwilling to deploy that capital for growth until we remove the uncertainty about a forward-looking recession.
So if you have cash to put to work now, Tony, you know, there's over $6 trillion in money market funds earning a solid, 5%. Do you pull that out and make some purchases? Do you dollar cost average in? Do you buy some of these buffered ETFs that Gargi was just talking about? What do you do?
Well, so Matt, two things. Number one, I add into weakness in the broader market, not the S&P. I'm sorry, I am not able to. I'm not a research analyst for the top 7 companies or even the top 10, which now represent about a third of the S&P 500. So I would like to buy into a more equal weighted market in the smaller cap market. But I think you need a little bit more weakness. In terms of the $6 trillion, I want to dispel the myth that somehow $6 trillion can come into the equity market. The vast majority of that money, Matt, is designated as working capital in corporate America. So if you went out and raised money over the last 2 years and you put those millions of dollars in a money market fund because you haven't deployed it yet as a company, that's your working capital. You're not going to put that in the S&P 500 or anywhere else in the market. So the idea that there's $6 trillion waiting to come in, I think is totally inappropriate.
Agree. Well, or rainy day funds. I mean, that's where families who do save are holding that cash, and they're obviously not going to go and buy stocks today trying to catch falling knives.
Certainly a lot of people out there thinking cash is the place to stay. Tony Dwyer, we thank you so very much. That is market strategist at Canaccord Genuity. Now, I want to say also Bloomberg confirming now that Vice President Kamala Harris has tapped Minnesota Governor Tim Walz as her running mate. We're going to have more on that in the next hour with Wendy Schiller of the Taubman Center at Brown University. Of course, certainly the story of the morning ahead of Kamala Harris's speech tonight. Now coming up, we're going to talk more about earnings. Palantir shares surging after the data analysis company says it'll earn more money selling AI software. Ed Ludlow is going to join us from the West Coast with all the tech earnings news, including Tesla rivals Lucid and Rivian, both up this morning. Stick with us. This is Bloomberg. This is Bloomberg Open Interest. A quick check on the stock market here, of course, because you have the NASDAQ 100 really flat on the day, flipping into red territory, back and forth, really. The S&P 500 still keeping gains of about 0.3%. Interesting here to see those moves. Russell 2000 also slipping really out of the green here, but pretty much flat on the morning. We'll keep an eye on it as we go along, Matt.
All right, time now for top calls. Some of the analysts' action in focus this morning. First up, Morgan Stanley is removing Amazon as a top pick. The bank citing increasing margin pressures and says the tech giant needs to demonstrate an ability to deliver growth and profitability. Next up, Piper Sandler is raising its rating on CrowdStrike to overweight, saying investors should build positions at current levels. The analyst says the cybersecurity company has been put in the penalty box, but the stock represents a compelling risk-reward going forward. And finally, Cantor Fitzgerald is upgrading Lucid to neutral on news of a $1.5 billion cash infusion. The struggling EV maker announcing today that it received, yesterday, that it received the funding from Saudi Arabia's public investment fund. The lifeline comes as the car maker works to overcome production hurdles, and obviously with slowing EV demand, it's pretty difficult, Sonali. I'm looking forward to talking to the CEO, Peter Rawlinson, in the next hour.
And now Bloomberg Technology co-host Ed Ludlow joins us from San Francisco. And maybe we start just there because you are so deep into this electric vehicle story. You see this massive investment from a division of Saudi Arabia's public investment fund. And you wonder, will it get Lucid to its goals when you look at how much competition and, frankly, the lack of exuberance there is this year around the EV sector?
Yeah, I mean, $1.5 billion seems like a lot. It's on the heels of a $1 billion injection in March. So they keep tapping Saudi for more money. But $1.5 billion, 50% of it's convertible, 50% is an unsecured loan. It's not a lot of money in the context that negative free cash flow is like $750 million a quarter still. They're only selling 2,000, 2,400 vehicles a quarter. And they've been doing that for a couple of years. They're not really making any progress on scaling. And yes, they're launching this new SUV, but, you know, 2 models at a premium price point in the market that Matt described, you know, it's gonna take a lot more for them to sort of convince the market of the long term, I think.
Yeah, when we compare Lucid to Rivian, and, you know, Rivian has earnings out tonight.
Right.
How much do they lose per vehicle? Rivian's losing, what, $40,000 per vehicle? And Lucid, with those numbers, is losing a lot more.
Yeah, Lucid's losing a lot more, but Rivian's the same story, right? I think the estimate for Rivian's negative free cash flow is like $900 million. I guess the point of difference with Rivian is that they're operating at a different scale. You know, 57,000 vehicles this year is the target for production. And they have a stated goal. So they're losing $39,000 per vehicle on a gross loss basis right now. They have a pledge to be gross profitable on each unit sold modestly in 4Q. And a big part of that story is retooling, changing parts, but also tax credits. So that's somewhere I'm going to be looking for in the earnings statement is tax credits, because they've listed it as a big factor of their pathway to profitability. But that's funny, isn't it? Relying on tax credits rather than actually selling vehicles profitably en masse kind of echoes the early days of Tesla's pursuit of profit.
Ed, I want to switch gears and talk about Uber a little bit here, because you are seeing a lift in shares this morning, and you're seeing them really coming in with better than expected results. How do you see Uber's kind of standing here in terms of worries about the consumer? They're really shaking them off.
Yeah. Well, at a macro level, if you put it in aggregate with DoorDash, you're getting a similar story, that the demand side of that economy is intact. So gross bookings on the platform, which is basically everything that transacts through it minus tips, up 19% year on year. The bottom line, Uber's done very well. 50% of the transactions done on the delivery side were Uber One paid membership. So something's working in the business model, but it is very positive that they're able to sort of hold up this demand, particularly on the sort of more premium side of the platform. And the street really likes it, whether you use adjusted earnings or otherwise. It's a good story.
All right, Ed, thanks so much for joining us. Bloomberg Technology co-host Ed Ludlow has a lot to talk about on his program, so definitely join him with Caroline Hyde at 11. And don't miss our conversation with the CEO of Lucid in the next hour. Then tomorrow, we're going to hear from Rivian CEO RJ Scaringe, following his earnings report right here on Bloomberg Open Interest with Ed Ludlow, our EV reporter. Coming up, the plunge in global shares stunned even seasoned market observers. We take a look at the $6.4 trillion sell-off next. That and more in our Wall Street Beat. This is Bloomberg.
We think that the carry trade unwind, at least within the speculative investing community, is maybe somewhere between 50 to 60% complete. So we are not done by any stretch. Some of the technical studies we've done suggest that once you get very large, sharp moves in short periods of time, like we've had with the yen, the technical damage that it inflicts on portfolios is not easily undone.
And it's time now for the Wall Street Beat, because we're looking at the $6.4 trillion global wipeout and how some fear the great unwind has just begun. It's today's big take, and joining us now is Bloomberg's Bailey Lipschultz, who's one of the authors on this story, of course, one of the most read. And this is the big worry, isn't it? That we saw this sell-off yesterday, we saw volatility blow out, and really there's more to come.
Well, that's the big uncertainty and the big unknown, Sonali, is that no one knows if this is the, as we write, if this is the end of a 3-week pull down that really accelerated over the last 3 days, or if it's a sign of things to come. And when you look at volatility spiking like it did, and you look at the kind of rotation away from stocks that we've been seeing, it's no longer selling big tech to buy utilities. Everything was down sharply yesterday. The big question is, how does the Japanese yen play into that? How does the kind of lacing of all of these markets, whether it's bonds, stocks, or even crypto, how does that play out?
And perhaps a market that was more levered than met the eye.
Yeah, I think it's important to kind of explain the carry trade, at least in basic terms, for viewers who aren't, immersed in, like Sonali obviously talks about it every day. But basically, you have a generation of traders who are borrowing yen, selling them for dollars, and then putting the dollars into more profitable trades here, right? They haven't really seen this kind of snapback very often in terms of the yen going from, 162 to 140 in 2 weeks.
No, precisely. And you see that July 3rd, we were at 161, almost 162 on the dollar yen. And now, as you mentioned, it is 144, going back towards that 140 level that we saw coming into the year. So as you mentioned, if you're borrowing yen because the interest is so low and the cost is so cheap to then deploy it, whether that's into bonds, whether that's into NVIDIA, the Mag 7 names, when those trades unwind, you're forced to sell to then bring that back to the
right. They owe the 161, exactly. And now their dollar only buys 140, exactly. So they need to spend more to get that money back.
And this goes back to, and I've been covering markets for a number of years, and you have conversations, whether you're an industry specialist or a macro investor, you wind and unwind trades. So we're seeing that unwinding because people have piled into similar trades.
Now that's a massive unwind with a carry trade alone. There's another wonky dynamic here, and that is all the people who are having to sell volatility into this market. And you saw that panic level of 65 yesterday. You're now back down to about 31. Still, 31 is relatively elevated to where we've been. Bailey, you cover the capital markets so closely. There was an IPO comeback. There was a bond market comeback in terms of issuance. VIX at 30. Does that ruin all of that hope?
Well, the one thing when you look at, especially with new issuance, August is so quiet historically. So we happen to be in a month where people aren't actually going to raise capital.
Pain could have been worse.
Exactly. If this happened post Labor Day, when we're penciling in a lot of these bigger deals, the last real window when I talk to capital markets bankers, that's when the pain could be kind of more drawn out and more kind of dire for would-be issuers. Whereas again, we're seeing the turnaround Tuesday not really play out. But the big question is what happens in the coming days and weeks, just given, for the most part, big tech earnings are behind us, and a lot of those seasonal factors are going to weigh. Typically, we see August and September being weak.
A lot of people are lucky this happened in August. You know, they're sitting at the Paris Olympics watching their,
Yes.
their Bloomberg terminals on their phone.
I think you're lucky already if you're sitting at the Paris Olympics. Bailey, thanks very much. Bloomberg's Bailey Lipschultz there talking to us about the unwinding of the carry trade. Coming up in the next hour, Lucid CEO Peter Rawlinson is going to join us at 10:30 a.m. Eastern. We'll talk to him about his earnings and the cash injection they got from Saudi Arabia. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Sonali Basak. Katie Greifeld is off today. Coming up, a crucial moment for the Kamala Harris campaign. She tapped Minnesota Governor Tim Walz as her running mate. We'll talk more about that. A tepid turnaround. Global stocks stabilize for now as some investors brace for more volatility after Monday's massive sell-off. And meanwhile, earnings abound from Lucid's $1.5 billion lifeline to cost-cutting at Edgewell Personal Care. We're going to talk stock with the CEOs of both of those companies later this hour, Matt.
All right, let's get a broader check on the broader markets right now. You can see that the S&P 500 is rebounding decent amount, 0.8%. Obviously, that's a long way away from the 3% that you lost yesterday, and the Nasdaq even further, up only 0.6%. But the arrows are firmly green, and the direction seems to be holding. In terms of the 10-year yield, it's bounced back up after the fall that we saw yesterday, or yesterday morning, certainly, as investors were clamoring to buy treasuries, but not a huge move, only up about 4 basis points at 382, 383.
And Democratic presidential nominee Kamala Harris has tapped Minnesota Governor Tim Walz as her running mate, as we've been talking about this morning. Here with more details is Bloomberg's chief political correspondent, Annmarie Hordern. And we've been talking about how she went left. But how left? At the end of the day, how much appeal would he have to bring in certain swing voters?
Well, this is why Terry Haynes is saying that Kamala Harris chose poorly with her first decision, saying that this is basically bringing in the Atta girls that are already there signing up and are going to vote for you because of how he's governed. But I would also take a look at Governor Tim Walz a little bit differently in the sense that when he was a congressman from Minnesota, it was a very rural district. Previously, it was held by a Republican. Actually, the NRA at this moment gave him an A rating. He differed in the House than when he was a Congress member than he was as a governor. So you can see an evolution of this individual. I think what's key for the Harris campaign is, one, he's from the Midwest. He has this ability to talk to white working class men that the Democratic Party has struggled to. That was key in the Hillary Clinton, another Tim Kaine pick of 2016. And he's from Minnesota. He's not from the coast. So yes, Minnesota leans blue, but he is a Rust Belt pick because he is going to be deployed to Wisconsin and to Michigan. And now he's going to also have to be deployed to Pennsylvania, which was the other choice she could have made. Yeah. She could have made a pure play into Pennsylvania, which is a must-win for Democrats. It's like the Florida of Republicans. It is a must-win for Democrats. She is going to be there tonight in Philadelphia. How important is Pennsylvania for her? She's kicking off this huge blitz in Pennsylvania, but it's not going to be with Governor Shapiro.
Although she wants voters from Erie, Pennsylvania, not necessarily Philadelphia, right? She wants the labor unions, which is why she probably chose Tim Walz. On the other hand, if she wants swing voters, she needs to show that she's not in support of, pro-Palestinian demonstrators. She needs to show that she can be strong on the border because that's where the Trump campaign is going to attack her. And she maybe needs to swing a little bit more to the center in terms of the culture war on things like DEI, gender-affirming care, pick your pronoun type of stuff. And I'm not sure that this VP pick does that.
So if she went with Shapiro, it would have been a little bit more of a balance when it comes to Israel. If she went with Senator Kelly, it would have been someone who's tougher on the border, a veteran. We should note also Governor Walz there served a lot of time in the National Guard. But Governor Walz, to your point, socially is definitely more progressive. So again, this is why
by the way,
Terry
National
Haynes,
Guard is different than a fighter pilot who was an astronaut. Give me a break.
At the end of the day, this is one person she's putting around her, right? Of course, it's an important pick. It's a vice presidential pick. But how much do you expect in the coming weeks about leakage around who else she might put in the cabinet and how that might shape her policy moving forward?
Oh, I'm sure we're going to get tons of leaks. I mean, from both camps, they're thinking about how they would, who they would place in some of these top positions. So already I've had conversations off the record with some individuals close to both camps about potentially who would go in, say, for Treasury or for state. I think you could probably draw your own analysis for some of these names. But more importantly, I think we need to hear from Kamala Harris. She has basically been anointed. Last night, she got 99% in the virtual vote call. But once Biden endorsed her and everyone rallied around her, this VP was the closest we were going to get to a Democratic primary. So she has basically been anointed. She has not sat down for a policy interview. We don't know where Kamala Harris stands on a number of issues. Something really important to Pennsylvania voters is fracking. When she was running to be president, she said she would ban fracking. Then the campaign came out and said, oh, no, now she's not. So she's basically changing policies dependent on the electoral college that she needs. So I think before we get starting leakages about who she's going to put in top positions, we need to understand how Kamala Harris would actually govern. How much
she's shifting on the issues that you think as much as J.D. Vance, or not that much, right?
I think there's a lot of shape-shifting.
It's a very good point. There is a lot of shape-shifting. Annmarie, thank you very much for joining us. Let's discuss the election further with Brown University Taubman Center for American Politics and Policy Director Wendy Schiller. Wendy, what do you think of Tim Walz as a pick? What do you think of what looks like this campaign going to the left to try and win swing voters?
Well, I think Anne-Marie's point about geography is really spot on. I would also say that this is about turnout. It's still a turnout game. It's still making up for the enthusiasm gap. The Trump voter is a very enthusiastic voter that's guaranteed to get out the door. Republicans themselves typically come home at the end and get out the door. People were disaffected in 2020. Trump had been making some inroads to get them back in the fold. And the question now is, can the Democrats match that energy? And so she made a conscious choice, it looks like, to shore up the core base of the Democratic Party. Let's take Michigan, for example. If you didn't pick the Pennsylvania governor, you still have to worry about Michigan. And she can do a lot in Michigan, but again, the Israeli-Gaza conflict is a big one. You've got a lot of concerns among union workers in Michigan, and Tim Walz was viewed by unions to be more favorable than Kelly or Shapiro. So this is about shoring up the core turnout game for the Democrats as much as it's about anything else, including policy and ideology.
So if you have the core under your belt with this VP pick, Wendy, how do you see her policy decisions playing out? If she wants to win the marginal voter going into the November election, where is she going to have to change her tune on policy?
Well, I mean, the problem for the Democrats among independent voters is, of course, things like the border and inflation, but taxes. There's a very big decision to make whether to extend or keep those Trump tax cuts that expire in 25 or not. And what do you do with the corporate tax rate, the highest income tax rate? If Walz is a true progressive, his rhetoric will be, tax the rich. That's what Biden talked about doing. Kamala Harris has to moderate that because people who make, let's say, $400,000, that's a lot of money, but they don't see themselves as billionaires or millionaires per se. And of course, they don't want to be taxed that way. And I think that is going to be something that independent voters are really looking at. Kamala Harris, what is her policy? What is she going to do? And how is she going to temper the populist movement in the party with the idea of attracting independent voters that if they believe she will raise their taxes, will not vote for her?
Assault, I think, is especially an issue for people who make $400,000 and live in New York, Connecticut, New Jersey, California. Are we going to continue to see a cap on state and local tax deductions, Wendy?
I don't think so, because I think the Senate in particular, they just sort of killed the bill in the Senate, but the Senate was moving towards trying to do something about that already. And I do think going into a 26 midterm election year, I think that makes a pretty big difference, thinking about the ramifications in those states for Democrats and Republicans. So, this was almost vindictive on Trump's part, you can imagine, get those states that didn't vote for him. I think there's going to be a little bit of a different political environment, and I think they are going to raise the cap as part of a larger package. But again, she's got to get that out there, that she is not as left as the image of the Democratic Party base is, because I do think independent voters might just stay home if they think that.
How are you watching the rest of this race? It's a long way to November, Wendy, and if you think about it, there are some pivotal moments, the DNC being one of them. We finally have the vice presidential pick on both sides. What are going to be the defining moments of this campaign?
The defining moments will be how each of the head of the tickets, Kamala Harris and Donald Trump, whether they stay on script, they stay with a campaign speech and a set of ideas that seems to resonate not only with their base, but all the independent voters, or do they go off script? Donald Trump has been going off script lately. It hasn't been working out that well for him in the last 10 days. Kamala Harris has been known to do the same thing. So can each of them stay disciplined enough to stick with a single set of messages, not go off script, and really mobilize their base? That is what I'm looking at. And we're going to see a little bit of that, obviously, in the Democratic convention speeches in a couple of weeks.
All right, great. Wendy, thank you so much for joining us. Really appreciate your time and your insight on this. Brown University's Wendy Schiller talking to us about, well, really the whole race, but of course the news is the VP pick, Kamala Harris, her campaign going with Tim Walz, the governor of Minnesota, for vice president. Let's take a look at what's going on in these markets. After the big rout that we saw over the last couple of trading sessions, we're starting to get a more definitive bounce back. The S&P 500 is now up 1.3%. Of course, not nearly enough to gain back even half of what you lost in yesterday's session alone, but still a solid number that doesn't look like it's turning around to the downside.
You know what I do find interesting, though? If you look at the Philadelphia Semiconductor Index, you are close to recouping all of the losses from yesterday.
On the SOX index alone.
Yes, on the SOX index alone. So this, the gains that you're seeing are not evenly distributed across the market here. You are seeing those AI names get some love, but remember that NASDAQ 100 has been wavering. So even AI and big tech taking a little bit of a divergence from each other. But again, you're right. Just generally, we have not recouped all our losses.
Yeah, NVIDIA adding 23 points to the SOX index, adding 12.5 points to the S&P. So a gain in NVIDIA right now up 4.25% makes a huge difference to any index on which it is hanging out price weighted. Coming up, London CIV CIO Aoifinn Devitt says the carry trade could be as big as $4 trillion. But the market is big enough to absorb that, and the Fed has enough firepower to stimulate this economy if we continue to slow down towards a recession. We'll ask her if it's time to buy the dip next. This is Bloomberg. Let's get now to high interest to look at what's making headlines around the world. Vice President Kamala Harris has tapped Minnesota Governor Tim Walz as her running mate. In choosing Walz, she's turning to a Midwestern governor, military veteran, and union supporter who helped enact a progressive Democratic agenda for his state. Harris is expected to appear alongside Walz at a rally later today in Philadelphia. Hezbollah and Israeli forces exchanged fire earlier today as tensions continue to rise in the Middle East. The Israeli military said several civilians were wounded and projectiles from Lebanon penetrated Israeli airspace, while Hezbollah said it launched several drones at military facilities in response to Israel targeting structures in the south of Lebanon yesterday. Tensions between the Iran-backed group and Israel have soared over the past 2 weeks. Citigroup's trading division has been hit with a fresh toxic culture claim. Christine O'Reilly is suing her employer ICAP, an arm of the world's largest interdealer broker, and her former client, Citi. She alleges that she was subjected to years of unwanted sexual attention and threats by Citi trader Benjamin Walters with the power to direct big transactions to her team or not. She said Walters' behavior persisted even after she reported it to a supervisor at his unit at Citi.
Now, I want to get a quick check on these markets because you have had gains a little quicker today than you saw a little earlier this morning. We are near session highs for that NASDAQ 100. Bid coming out of the bond market here, really. Yields going higher across the curve. A 10-year yield up by 4 basis points, 2-year up by only about 1 basis point, but money into the stock market nonetheless. S&P 500 up more than 1%. And let's see if all that exuberance sticks around after what we have seen to start the week. week. Let's talk about how this is all impacting markets with Aoifinn Devitt, CIO at London CIV, and Moneta CIO. She joins us now with her perspective. And you saw what happened yesterday. You're seeing the market finally take a little bit of a breather. You're seeing some positive signs in some of the earnings, at least. Where do you go from here?
Well, it's very interesting. We just had your previous guest talk about candidates going off script. And clearly, we almost had markets going off script yesterday drastically in quite a plot twist. But now they seem back on script again. So where do we go from here? We spoke with the number of the carry trade. There was a lot of discussion around the unwinding of the yen carry trade yesterday. And if that is around 4 trillion, which is still small in the context of overall markets, but meaningful, it's meaningful in the context of what is on the sidelines of markets waiting to get in. And that's the amount of money in money market funds, which could be poised to get into markets as dry powder if there is an opportunity to buy on the dip. And that's around 6 trillion or more. So where do we go from here? Well, clearly there is a lot of cash ready to buy on the dip. And we saw exactly that in Asian markets today, and we're seeing it in developed markets on our side now.
Aoifinn, we were talking with Tony Dwyer about this a little earlier, and he was pushing back on the notion that this massive, 6 trillion plus in money markets is really, potentially going into the stock market. He says that's, companies' operating capital, that's, families' rainy day funds. How much of that do you think really could be used to buy stocks?
It's very interesting. Certainly not all of it. It's true. It is cash has been a good place to stash capital for now. But remembering, if markets and interest rates are heading down, that cash is going to look increasingly like a drag. So it will come out of there to look for risk-seeking assets, to look for return. The hunger for yield will return. So clearly not all of it is earmarked for equities. But remember, there's a rotation going on as well. There is money going to be rotating within equities. And we've already seen that. We've seen that for weeks, markets having seen rotation into small caps, into mid caps, and out of large tech. So it's not necessarily just that money market fund capital that we're going to draw upon for the wall of money. There's also going to be money in fixed income, which finds when rates fall that fixed income perhaps isn't the haven they thought any longer. So yes, certainly not all of it is dry powder, but a lot of it is there, and we shouldn't underestimate the amount that can potentially buy on the dip, and we're already seeing that.
Another thing that's an interesting dynamic today, you saw the VIX hit panic levels yesterday at least 65, and you're seeing it subside. It ended the day at 38, now 10 notches lower at 28, but still elevated relative to what we've seen in the last year. I believe the one-year average is only about 14. So, Aoifinn, you have data treks saying that the VIX is sending a clear message that volatility will remain elevated for days, if not weeks. And if you worry about volatility, how do you navigate that in this market?
Well, you navigate it by being a long-term investor and having your eye on your target return and not trying to day trade this. And anyone who did just do that, essentially close the laptop yesterday and not be too detracted by the noise. Remember, there was no one big event, no trigger, no evidence of any credit problems. It was simply a culmination of many small drip feeds of data that we've seen over the last few weeks. And then, of course, the unwinding so-called of some part of the carry trade. So there was really no real event to change the fundamentals. So what you do with the volatility is you try to ride it out. We're actually getting used to much lower levels of volatility today. And clearly some of these plot twists that I spoke about earlier, there is now a sense that perhaps we perhaps did get ahead of ourselves in thinking that we're on this soft landing, no landing scenario. So there's going to be more volatility elevated for a while investors wrestle with this. And there have been so many curveballs thrown in terms of geopolitics recently, and we're still wrestling with that too. So a lot to contend with. We've got this suggestion of lower growth out of China, commodities under some pressure. So all of those things, we will have elevated volatility, but a long-term investor should not really worry about that too much.
If you do have, Aoifinn, capital to put to work, even long-term right now, what are the assets that you like? Do you buy an index fund? Do you look for something equal weighted? Do you maybe take a look at discounted commodities or emerging markets? What do you like?
Well, certainly always equal weighted in that having a core allocation means you're not being too tactical if you're a long-term investor, but picking those sectors. And right now there's clearly some froth to come off in the tech sector. And we're seeing that, and it can come off quite vigorously with those reasonable significant drops that we've seen. So I wouldn't be putting it there. If we're looking at a lower interest rate environment, and there is a suggestion this could start coming down and correcting with an easing quite quickly, we're hearing the siren call that rates are simply too high, then you want to look at bond substitutes, things like infrastructure. completely overlooked recently. Industrials, part of that rotation, but still somewhat overlooked. And real estate, supposedly bottoming. Remember, lower interest rates will stimulate interest rates. We're going to stimulate real estate. We're going to see mortgage rates coming down, and that should cause some of this to move. So I would say all of that diversifying asset area that we've seen before is definitely an area to be investing today.
Aoifinn Devitt, CIO at London CIV, we thank you very much for joining us on this Comeback Tuesday. Still ahead, the Department of Justice sees its first major antitrust win in more than 2 decades against the tech giant. We're going to dig into what the major blow to Google means for the tech industry. Stick with us. This is Bloomberg. Hello. How are ya?
Morning.
What's up, dude?
What's going on?
It's going. You're right on over.
Yeah. Well, I guess given where the market was yesterday.
Yesterday, a judge ruled that Google illegally monopolized the search market through exclusive deals with competitors. This is the first win for the government in a line of cases against tech giants as they look to crack down on antitrust violations. Joining us now is Bloomberg Intelligence global tech analyst Mandeep Singh. And Mandeep, it's not a surprise to anybody that Google has a monopoly in search, right? It's the only thing any of us uses to search the internet. But it may be a surprise that Google pays other company like Apple tens of billions of dollars to favor its platform. And this is what the Justice Department says they can no longer do.
Yeah, and look, I think the verdict did come as a surprise in the sense that nobody expected Google to lose like this. I mean, we still don't know what is it that they have to do to, given that they lost the case. And I think Google will appeal. They'll come for some remedies in terms of not having an exclusive agreement anymore with Apple. And look, Google is still the best traditional search product. You mentioned Google is a monopoly. I would argue right now with all the LLM search options that are out there.
LLM means large language models. So you're talking about AI.
Yeah, ChatGPT or
model.
Anything that, the biggest use cases for large language models are search. So I would argue with Amazon doing well in ads and, a lot of people searching on Amazon, TikTok, all these options are sort of, downplaying the fact that Google is a monopoly. And to me, Apple has more to lose here than Google.
Yeah, I do think that the share price reaction is interesting. You are seeing that certainly in the stock price, Apple actually dropping more than Google is. What is the ultimate impact for Apple at the end of the day?
I mean, look, an Apple iPhone user right now has a lot of defaults. Now, if Apple is not getting the $20 billion from Google, they have to charge per query or have some sort of an arrangement where, the search vendor, whether it's ChatGPT or somebody else, Bing or Google, has to pay per query. They can't sign an exclusive deal anymore. So it changes the Apple experience. At the same time, they have to generate that $20 billion from somewhere. And so that's where it gets interesting. What will Apple end up doing? Or they develop their own search.
It bears repeating. Google pays Apple $20 billion annually,
yes,
in order to default to Chrome or to Google search.
But what will ChatGPT and Apple look like in the search function?
That's an amazing fact, and it's a great question. Thanks so much for joining us. Mandeep Singh at Bloomberg Intelligence. You can find his work. By the way, I typed Google equity BICO, and I get Mandeep's primer, which is excellent, excellent stuff. Coming up, Lucid got a $1.5 billion cash injection from Saudi Arabia as the car maker tries to stay in business through production hurdles and a slowdown in demand for expensive electric vehicles. Let's take a pit stop to check in on Lucid. The stock off to the races after announcing a $1.5 billion investment from Saudi Arabia's public investment fund. The investment comes as the EV maker beat second quarter expectations on revenue and vehicles delivered. Joining us now is Peter Rawlinson. He is the CEO as well as the CTO of Lucid. Peter, great to have you on the program. Let me ask first about this cash injection. I think the biggest question investors have is, do you have the money to get through this difficult period and to profitability kind of on the other side? How far away is that profitability on the other side? What's the plan look like?
Well, Matt, you're referencing the $1.5 billion that we received from the Public Investment Fund yesterday, which we announced. And this will secure our financial runway well through the Q4 of 2025. And this is significant for a number of reasons. First of all, it is a resounding endorsement in the Public Investment Fund's faith in Lucid. I'd like to think they see us as the true technology leaders in this space, and that's a cornerstone of the relationship. And also, we're key to them realizing their Vision 2030. But also, this funding sees us through not just the launch of our Lucid Gravity, but through the crucial ramp-up period, which sees us right through 2025. It makes a huge difference to us.
So we always talk about the $40,000 or so that Rivian loses on the sale of every one of its vehicles. I don't know how much you lose on the sale of each Lucid Air, but it's got to be a lot more because your burn rate is about the same and you sell far fewer vehicles. When will you start making money on the products that you sell? On the Lucid Air that we're looking at in video right now, it's beautiful. Reviewers absolutely love the vehicle. They love your technology, but it's very costly. The Gravity, I'm sure, will be the same story. When are you going to start making money on each of these vehicles that you sell?
So there's a misleading narrative here, Matt, that all those costs are the cost of creating the car or the cost of our technology, and that's simply not true. So much of our finances are due to our long-term investments. We've just completed, or very nearly completed, a $3 million build-out of our state-of-the-art factory in Arizona. We've brought in logistics, we've brought in even stamping into a vertically integrated operation, and we've really expanded and brought under one roof the world's most advanced powertrain manufacturing capability. No one has a facility quite like this. And also then we're building out a factory in Saudi Arabia, which will have a capacity for 150,000 units per annum. On top of that, we have the investment of bringing what I believe will be the world's best SUV, the Lucid Gravity, to fruition, scheduled for start of production later this year. And then we're also building out our sales and service network and investing in our mid-sized platform, which is going to be a landmark product for us, scheduled for start of production late 26. So with all those investments for the long term, that's what's dominating our finance. And this is falsely read as it's costing too much. We've got the best technology in the world, and it is cost-effective technology. We can manufacture this. Make no mistake.
Peter, another question I have for you here is going back to what Matt was initially asking. On one hand here, your investments can obviously be seen at scale. You have this $1.5 billion infusion. It's a significant amount of money. You said it'll last you through the end of next year to really make a lot of progress here. But how important is profitability to you? When is free cash flow going to be at more of a sustainable pace?
Totally. Profitability is the end game for us.
But when?
And it's all about scale. We haven't guided precisely when, but it is all about scale. And we have 4 steps to get to true scale. One is to grow brand awareness so we sell more Lucid Airs. And we've just come off 2 record quarters of deliveries. Q1 was a record for us. Q2 was a record. And with that 70% up on our Q2 of 2023. We're outselling our core German competitors in the US very significantly. And this is not really fully appreciated. Then we've got our Gravity, our Lucid Gravity, coming late this year. That will have a total addressable market of 6 times our sedan. Then we have our mid-sized platform, potentially a total addressable market 30 times. And on top of that, the icing on the cake is if we can get some more licensing or supply deals with another automaker for our world-leading technology. It is all about scale.
You know, speaking of Gravity as well, you mentioned later this year, but what do you think early demand will look like? And when exactly are you planning on opening up those reservations?
I can't wait, because the response I'm eliciting is that people just want to buy this thing. When people first saw the Air, they thought it was an amazing technological product. But when they see Gravity, they say, when can I buy it? And that's the difference. This is the product that all America is waiting for, is yearning for. I think the market's going to be huge. And there's nothing quite like it. It's got the driving dynamics that'll blow off a Lamborghini Urus. It's got the poise and stature of a Range Rover. And it's got more legroom than even an Escalade. And it's a really compact car, usable in Metropolis on the outside. So there's never been anything quite like this. Now, regarding when we first start taking orders, we will do so sometime between now and start of production. Watch this space. I don't want to go too early with this, because I think some car companies have gone too early and they've done a disservice to their customers. We want to see a line of sight to deliveries from that point in time where we take the first pre-orders. But that's going to happen. Watch this space.
Are you concerned about demand? I mean, obviously at the very top end, wealthy people are willing to dip their toe in the EV market and buy a luxury product. But if you look at a lower price vehicle, which is, I'm sure, in your future, the infrastructure just isn't there and the demand doesn't seem to be there. How do you work on that?
Well, I think we're going through a blip right now. I think that demand is a function of people's experience with EVs, and there's been a lot of subpar EVs. People are experiencing the Lucid Air, and more people are becoming aware of how awesome it is. Our sales are up 70%. We're not seeing a dip in demand, and we're not seeing problems manufacturing. We can make them. It's all to do with the market. So when we go to a more affordable car, I think there's a huge latent demand there. And also, when we talk about infrastructure, a lot of that is the draw on the grid. Because we've got the most advanced technology in the world, we just announced a landmark, a record-breaking 5 miles per kilowatt hour, the most energy efficient car in the world. The Lucid Air behind me, Lucid Air Pure, can do 5 miles per kilowatt hour. That means there's less draw on the grid, less need for electricity. This is the advancement that we can make.
You know, we are very close to a presidential election here in the United States. And of course, the Trump ticket has been somewhat critical of some of the changes being made in the United States when it comes to electric vehicles and the infrastructure around it. Do you think that any potential change in administration could mean a difference for your business?
Well, look, I'm politically agnostic here, but I've got relentless faith that common sense will prevail and the market will prevail, market forces. More and more people are realizing that a car like ours is an inherently superior experience to a gasoline counterpart. Whether you invest in a car like this for its environmental credentials, which are profound, or for the driving pleasure, it's a superior experience. So unlike someone else, I'm not being distracted by politics. I'm relentlessly driving to create the best product for the customer.
Peter Rawlinson of Lucid, we thank you very much, of course, on the heels of earnings and a $1.5 billion check here from a division of the Saudi Arabian Public Investment Fund. We're now going to get a check on markets with Bloomberg's Abigail Doolittle. Abby?
We're looking at a nice rebound at this point, Chanelli. Take a look at this chart, this intraday overnight chart of the NASDAQ 100 futures. And at the highs after yesterday's sell-off, that roughly 3% sell-off for the NASDAQ, at the lows down more than 6%, heading at one point to its worst day since September of 2022, up 2.4%, and then interestingly, right after the open, dipping slightly negative, telling you that folks are still a little bit nervous, but right now, overall, a very healthy 1.2%. Beneath the surface, though, there's something interesting going on, which is a bit of a tug of war between the winners and the laggards, the leaders and the laggards, I should say, within the NASDAQ 100. NVIDIA and Microsoft getting a nice bid. NVIDIA, of course, yesterday at one point down as much as 15%, the worst day since 2020. But Apple still down 1.8%. Alphabet off a little bit, of course, yesterday losing that suit within the court of now being considered a monopolist. But this is beneath the surface. Let's see which side wins. And one reason that we may have more green on the screen than not on this board, but overall with the NASDAQ 100 up 1%. Turnaround Tuesdays, well, after a 3-day slide, Tuesdays do tend to be by 25% the day that is a turnaround. The big question is, will it last? If we check in on an interesting chart here of Apple, and again, the biggest weighting to the S&P 500 and the NASDAQ. We'll take a look at this action, this big move higher, up about 40% in a very short period of time. The gap lower, catch a falling knife. Matt, this one looks like it's going down to 170. If that happens, it is very likely to not only drag on the indexes, but also on sentiment.
Yeah, absolutely. Such a huge company is a very big and heavy weight. Abigail, thanks very much. Bloomberg's Abigail Doolittle looking at the technical side of Apple shares. Coming up, the CEO of the company behind Hawaiian Tropic and Banana Boat says consumers are being more careful. In the sun? We speak to Rod Little, Edgewell Personal Care President and CEO next. This is Bloomberg.
Another company out with earnings today is Edgewell Personal Care. The company behind brands like Banana Boat and Schick Razors is tweaking its products to maintain profitability. Joining us now is Rod Little, Edgewell Personal Care President and CEO. You think about where the consumer is today, Rod, and what are you navigating when you look at a whole consumer base that needs to buy razors and sunscreen but is feeling pinched right now?
Yeah, good morning, Sonali. Good to be with you. Look, the consumer is under some pressure. We talked about that last quarter. We saw some overall slowing of the growth rate of our aggregate categories that we play in here in the United States. Past 52-week average, those categories grew at roughly 2%. Last 13 weeks, so last quarter we just reported, it was about flat. So there is a little bit of sequential slowing. I think our view is it makes some sense, right, when you look at what's happening around us. The basket around food has gotten more expensive. People are still prioritizing entertainment, leisure, and travel. Housing's expensive. If you own a home and you're insured, the insurance rates are going up, not down, quite significantly in some cases. And so with that, consumers have the income they have, and they're making choices in the everyday basket, just looking for value, and looking for those brands that provide that. We actually have brands that provide good value. We're not up in the premium price tier. Value, kind of everyday fair price brands that deliver on the promise they make. And so in many cases, we're advantaged by that. Sun Care, for example, Banana Boat, Hawaiian Tropic, value-oriented price brands deliver a great performance, and consumers are sticking with them. If that price value equation's out of balance, now's when consumers are choosing not to buy you. And so that's what we're seeing.
Are these, are these brands really more staples than discretionary? If we go into a recession, Rod, you know, people are still going to need to wear sunscreen or put it on their kids for sure. Or is it like a luxury thing because you use it more often when you can afford to go on vacation?
Yeah, our brands are primarily everyday use brands, less discretionary. And so FemCare, you know, tampons, pads, liners, that's core to the woman's routine. Those are everyday use products. Shaving, people grooming, you know, we have with a grooming leader here with Jack Black, Bulldog, and Cremo. Guys are going to take care of themselves regardless of if there's a recession or not. As you then start to get into sun and skincare, that's where it gets a little more discretionary for us because our brands are occasion-based. And so if you think about Banana Boat, Hawaiian Tropic, you use them when you're out for a walk, playing golf, at the beach, at a pool. And it's those moments when you're outside and having some fun where you're using our brands. The good thing is for us, that's happening more often. COVID taught people that it's good, it's safe to be outside. I think with all the mental health issues we see today, being outside, being active is good, it's a positive. And more people are wanting to take care of their skin and playing for longevity. And the number one thing that ages skin is sun exposure, right? So awareness is up as well. And so even though they're more occasion-based brands, we're seeing it play more and more like everyday use as it comes to SPF.
But it's interesting, even though you have some of these products that people would go back to buying every month no matter what, some of these products are where you saw a little bit of weakness, for example, in the razor blade category. Why is that? And do you see people even trading down, going from, say, kind of the nicer item to a 12-pack or something where they can kind of get a little bit more bang for their buck, even if the quality is traded down?
Yeah, razors and blades, Sonali, you went right at the category that's most under pressure and declined about 3% total category here domestically in the U.S. last quarter. Outside the U.S., we're flying in razors and blades, and we're not having the same issues we're seeing with consumers or the level of competitive intensity that we see here domestically. So including Canada and outside the U.S., it's fine. In the U.S., highly competitive category. In the women's space, for example, it's very crowded. Lots of brands, lots of disruption happening in the category. The leader is being very price promotional and very focused on price as a response to that disruption. But what you're seeing happen within the category, while it's down overall and our market share is down in the quarter, there's some transitory things happening with shave preps that's impacting us negatively. But you're seeing value win. And so our Billy brand, which is a value-oriented price point brand, was up 180 basis points of share in the quarter. We're at a 16 share in Walmart now with that brand. We're over a 10 share national, and it's growing share period on period. Part of it is it's an amazing brand. There's great performance with the shave quality, and it's priced in that value price point tier. So we do think we're catching some consumers who are looking to trade down, if not for private label, at least to a value-oriented brand play.
The stock, Rod, was punished in yesterday's sell-off. I guess just as the tide drops, so do all boats, right? But a lot of that came from the trigger of the non-farm payrolls number and worry about the U.S. economy. If the Fed were to cut rates, 50 basis points, 75 basis points, we think about home sales and car sales. Does it help you as well? Would you like to see the Fed cut rates?
Yeah, I would personally. I think it's well documented that it feels like that's coming, that's baked into the projections now. I do think that will help us. Look, as we talked, the basket's expensive. So anything that gives consumers some slack would be helpful to us as we just think about consumption more generally. And so, look, I think we set up fairly favorably as we go forward. We've got some easing of the commodities basket. The dollar's weakened here over the last couple of trading days, certainly versus the yen. Japan's our second largest market. We're very exposed to the yen. And so for us, as we look at the future and look at kind of where the commodities basket might go, cost of inputs and labor and wages, with a rate cut cycle now potentially starting, I think that sets up quite favorably, not only for us, but our industry in general.
Rod, one of the things I've noticed lately in buying staples for my family is that I do a lot of that shopping on Amazon. And when I go on Amazon and look for low dollar cost opportunities, they're always straight out of China. What is Chinese competition like for you, and what do you think about Amazon selling so many Chinese goods to the American consumer?
Yeah, it's very limited for us today, Matt. We play in categories where performance really matters. Quality of the products that you use in your daily routine matter. And so FemCare, for example, it's a regulated category by the U.S. government. We take that very seriously in terms of how we play in the category around health and safety. And women typically are not going to compromise in that category. You have to have products that consumers can trust. Razor blades, when you've had a bad one on your face, leg, or armpit, right? If you're a consumer, it's very, very obvious. And what we see is people go for trusted brands, even in tough environments. And we have those brands in our portfolio. We don't have, big problems with Chinese competitors or other competitors that play at low opening price points, for example, because consumers are still looking for value, and that's a combination of price and quality. And we fit very nicely in that value range because, as I said earlier, we have well-priced products that are very efficacious and deliver on the promises we make.
All right, Rod, fascinating company. Great to get your intel. Rod Little there of Edgewell Personal Care. Coming up, the market-moving events that you need to be watching today. That's next in our trading diary. This is Bloomberg. Time now for the trading diary. What you need to be watching this week. Vice President Kamala Harris will hold a rally this afternoon in Pennsylvania. She's picked Minnesota Governor Tim Walz as her running mate. And we're going to get earnings from Airbnb as well as Rivian after the bell today. Don't forget, we're going to speak to the CEO of Rivian, RJ Scaringe, tomorrow. More earnings from Disney and Novo Nordisk out on Wednesday. And then on Thursday, we get earnings from pharma giant Eli Lilly. No doubt we will be talking more about those GLP-1s. I got to get a hold of these GLP-1s, you know?
Keep saying that. I wonder when you're actually going to.
I had maybe a pint and a half of ice cream last night, and it was ill-advised.
I think that is just fine, Matt. And you know what? In addition to that, though, I do want to check on these markets because I'm freaking out a little bit here. You're actually not only at session highs, you're watching the S&P 500 up 1.6%. That Philadelphia Semiconductor Index I'm super interested in, up actually more than 2% right now. You're watching a lot of those fears from yesterday just being shaken right off. And the 10-year yield really losing that steam down to 385. So interesting setup for the rest of the week.
Yeah, absolutely. We'll see if this turnaround Tuesday continues throughout the session. Coming up this week on Open Interest, join us for the C-Suite interview. The CEO of Resi will join us, Pablo Rivero. This is Bloomberg.